What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the SPY, the Nasdaq, the QQQs, and the indices. Break down what the charts are telling us, what you should be watching for going forward, and what just happened with the FOMC meeting. I'm also going to talk about the big earnings coming out for tomorrow and the data that will affect the markets as I give you guys my price predictions for many different stocks. Once again, for Tesla, the QQQ, and NEO, and many other big stocks out there. Before I break anything down about all of this information, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and upon the $100 is the account, you're guaranteed up to 5 free stocks, each worth up to $2,000. And the best part is, then it could be a free Tesla share. The offer ends in just 9 days. Check it out before they run out. With that out of the way, let's get on with the video. So anyways, when it comes to SPY, this thing was down about 0.69% for the day, and we did see quite a bit of volatility. But as the day went on, we did see a nice pop, almost exactly like I predicted. The only thing I could not predict was what would happen after Powell spoke. But I told you guys we'd like to see a nice push up in the markets approaching the rate hike decision. And once the rate hike came out, we'd like to see the market pop, and that's what happened right here. This is when the decision came out. We saw the market pop to 413, came a little bit down, then pushed up and continued to push up to almost 414 shortly after the rate hike decision was out and Powell started to speak. Then Powell spoke. The market was just very choppy, had some moments where it tried to break out and it ended up failing. And then we had this wedge that was basically forming, and we got a clean break below it, and we got a rug pull after that. So after Powell said what he had to say, which I will talk about in just a couple of minutes very briefly, we saw a rug pull and the market came down. And the real question is, are we going to continue to crash, or is the market going to try to bounce first and then, continue to drop? I'm going to break that down in just a couple of minutes. First, let's talk about the data. For tomorrow, I just want to note that we have some, what is this? We have some initial jobless claims data. We also have very important gas numbers, and then some exports and imports. All of those are going to be very important, but they may not actually dictate the bigger moves. And then for Friday, we have non-farm payrolls and the unemployment rate, a couple of things like that, and also used car prices, which is somewhat important for inflationary data, not so huge though. And the biggest thing coming out from this point on, however, is going to be the earnings, right? Tomorrow is a massive day for earnings. We have Shopify, Coinbase, Lyft, Peloton, Moderna, and the biggest of them all is going to be Aapl. Make sure you're ready for this one. Aapl is going to shake the whole market. If Aapl pumps hard and explodes, the market is going to bounce on Friday. This is going to be after the market closes, by the way, after close. So the reaction is going to be on Friday. Okay? If Aapl does well, the market's going to squeeze. Shorts are going to get destroyed. This is what's been happening for the last few weeks, and it's very possible. But if Aapl doesn't do too well, and Aapl technically is a bit overextended, you could technically argue that, there's going to be a rug pull on Friday. The market's going to crash. Make sure you're prepared for this. Tomorrow is going to be massive by the time we close. However, why did the market get rug pulled? What happened? What did Jerome Powell say? That's the question. I'm going to answer exactly what he said. Jerome Powell was speaking, and he didn't really say anything in favor of the bulls. Why? Because the market does not like uncertainty. You have to remember that the market wants to be certain about everything. The market wants to know. It does not want to speculate. And the Fed did not give the market certainty. The Fed was very uncertain about what they're going to do in the future. They gave us 25 basis points for this meeting, for the next rate hike, but they did not hint or signal that this is going to be the final rate hike. Jerome Powell said, given the fact that when you look at what happened with manufacturing numbers, the price is basically going up, and many signals out there that suggest there's a possibility of there being an uptick in inflation, the Fed was very stern and they said their goal is to get 2% inflation, not 3%. They were asked, what about 3%? They said, no, not 3%, 2%. And Jerome Powell did mention there's going to be job loss, there's going to be pain. He was asked about a recession. He said, A mild recession is a possibility, but he's favoring a soft landing still being on the cards. And if a recession does come, he still said it's going to be very mild, not too extreme. He also mentioned that it's possible for inflation to come down without destroying the jobs market. He did say job losses will come. There will be a tightening of financial conditions, but once again, it may not be to the same extent as like 2008 or the Great Depression. And then the question is, what about the future rate hikes? And Powell said that they don't know yet. They're going to react to the data. That means there's no guarantee they're going to pause. They might give us another rate hike again as excuse me, sorry guys, I apologize. As crazy as that sounds, there could be another rate hike. Or they could pause, but they're going to look at the data, what the data tells us about inflation, because we have CPI coming out next week. Also, we have lots of jobs numbers coming out that's going to dictate their policies. They have lots of data to look at before they make a big move like that. And then when it comes to the banks, Jerome Powell said we should be very firm on the bank's standpoints. He said the banking situation is not too severe. They have it under control, and there's going to be support and aid for them. However, the thing about that is the fact that they're continuing to raise rates even more, and this could lead to even more pain for the banks. And a lot of this was surprising for even the Fed. So I wouldn't be too certain about anything just yet, because when the Fed raises rates to this degree, every time, something's going to break, whether it's a credit crunch or consumer sentiment or consumer spending, just something's going to break. And we don't truly know exactly what it's going to be yet, but we are seeing lots of banks breaking that could be like part of it. And this is likely going to continue now that the Fed has raised rates even more, and they may continue to do so. So PacWest and Western Alliance are just two smaller banks. The regional banks, they're much smaller. It's very important we have small banks too, not just like large ones. But now they're taking hits. They're taking big hits. And we're likely going to see a continuation of this as the FDIC steps in to start acquiring the banks to resell them, or to help JP Morgan or other big banks acquire them at like discounts. But the bottom line is it's a tough situation, and this is likely going to continue now. This could lead to more pain for the stock market. This is the rate hike. This is just for the June meeting. The market is expecting a pause for June. Don't know about that. It's a possibility. Very likely. I think they're most likely going to pause, but for what reason? Is it going to be because of lots of pain, or is it going to be because of something else? We'll have to wait and see on that. Elon Musk mentioned that more rate hikes will cause a severe recession. He's most likely correct about that. I don't think it's going to be a mild one, but then again, I mean, I don't truly know the future, but like I said before, history tells us the recession is going to be more severe than what Powell is saying. The Fed have lost a lot of credibility, so like I said before, it's still very possible. Now let's talk about the charts. I know I've been talking a lot about the other things. Here's what I'm seeing for SPY, okay? We had this wedge that was basically forming for the last day and a half. There were signs of it forming, but we had confirmation today after we saw this drop and this hold right here in the morning. We got the pump, as I predicted, the pump approaching the rate hike decision, and then like after we got the pump, and then after that, boom, we came down during the last hour very hard. And we're currently actually at around 407 right now, so not a good sign. What do I think is going to happen? Well, look at the structure. It looks very distributive. We also have this possible head and shoulders like formation. We obviously have two shoulders. It's just that the support is kind of like a little off there. But besides that, we basically have a head and shoulders formation on SPY. And it looks like this. I know I'm kind of zoomed in a little bit too much. So head and shoulders like formation appears to be on the table. A break below the wedge that was forming. And then our major support should have been 408. We should have held 408. We really should have. I know this is saying we closed around 408, but then we are a little down in the after hours. So here's what I'm seeing. The odds are heavily favoring over the next few days, SPY coming down to fill this gap and hitting 404. All the way down to 404 is what I'm seeing. However, Aapl earnings will determine how soon it happens. Do we crash before? Do we crash after Aapl earnings? We'll have to wait and see. There's a chance we're going to make an attempt to bounce tomorrow, because we do technically have a bullish divergence forming. There's going to be an attempt to bounce. Maybe 409 gets retested, maybe 410 or so. just an attempt to push up, and there's a good chance it's going to fail if we get very close to the 5 EMA on the 1 hour time frame. That's what I'm predicting. We try to bounce, then we end up just failing, and we just see the market continue to downtrend because Powell is not giving us what the market wanted. Powell is not giving us confirmation of a pause, and we're likely going to see more downside after that, either by the end of the day tomorrow or going into like Friday to early next week. I am anticipating us breaking below 408 and coming all the way down to tank to 404 and fill this gap down here. I think it's very likely. That's what I'm predicting. A small bounce, then more downside. For Tesla, this is going to also react to the earnings, of course. It has some relative strength since it's up about 0.19%. For Tesla to remain bullish, it has to break 163, then 165. If it breaks those, 170 becomes possible. To be bearish, it's going to have to retest 160. If that fails, it's going to drop lower. I'm seeing Tesla trying to bounce in the morning, retesting. It's the same thing I've been saying in my videos. I'm basically repeating the same thing many times. But here's the thing. Look at the last 2 days. We bounce in the morning, we come down. Bounce in the morning, come down. We're likely going to do something similar tomorrow, but maybe not as high depending on how the market performs. We might see Tesla revisit 163 to 165 depending on the news, then get a rejection, come back to 160, and if we get a bigger sell-off either on Thursday or Friday, we could see Tesla break below 160 and drop even lower, all the way back down to 158. If that fails, 155 could come, but that's what I'm basically seeing, a small bounce and more of a rug pull. For Coinbase, not much to say. Excuse me, sorry guys. I apologize. There's a possible bullish divergence here that could be forming. I don't know if we broke this low yet. If we do break down a little more, this could form a bullish divergence. However, it's also going to depend on earnings, which is tomorrow for Coinbase. I expect it, well, typically before earnings, stocks make big moves, whether they push up or they come down. So far, Coinbase has been downtrending approaching earnings, so we'll see what it does after earnings comes out. I'm hoping for a bounce. I would like to see that, but I'm always open to anything. Now, for bearish on Coinbase, it has to break below 48 and retest 45. For bullish, it needs to break above 50. I'm seeing it just chopping tomorrow, pushing up in the morning, then just chopping back and forth. And if we do continue to break down on the overall market, this might cause Coinbase to come all the way down to 45. The dollar is pretty flat so far, not really getting a breakout. So even if the market does downtrend, it does not have to be extreme. This does not mean the market's crashing to new lows or anything like that because the dollar is not breaking out. But it did actually drop as Powell talked about the tightening of financial conditions and another rate hike. For NEO, it's trying to base around $7. If it turns bullish, it's going to break above 8. If we're bearish, it's going to retest 7.33. I'm seeing a push up tomorrow to 7.9, a rejection, then just very sideways price action. Not seeing much of a divergence or anything like that. There's not a whole lot going on with it. It still is quite weak because on the bigger time frames, there's clearly a downtrend. There's no clear sign of a true balance, but it is trying to base, and I'm seeing this from the RSI. So it might try to push up, then come right back down to about 7.33 and close very flat, maybe a little bit in the red. That's what I'm seeing. The HYG is also pretty flat, so it is agreeing with what the market's doing, but not selling off as hard. If it does continue to sell off, this would be bearish as we're about to get a crossover on the PPO, which could become more bearish. Microsoft's at 304. It could actually come all the way down to 300 flat because we are seeing some bearish signals here. I'm anticipating a small bounce though, since it did drop pretty hard. A small bounce in the morning. We test up like 305, and if the market just gets rug pulled and that's it, it's going to come all the way back down to 300. The QQQ looks bearish to me. On the daily chart, it looks like this basically. Nice rejection, and then our daily candle is just not looking pretty. Right, we opened here, we pushed up, came down, dropped all the way down, and this candle looks bearish. We're going to try to make an attempt to bounce, so it might try to make its way back to like 318, and it's likely going to fail and just come down to fill this gap. So I'm seeing 313 on the QQQ either tomorrow. Over the next couple of trading days, I am seeing it coming down. This looks very distributive, and it's very likely more downside is coming. The VIX is up 3%. Why? Because the market is slowing down. The VIX is showing some strength. If it continues to do so, that will remain bullish for the VIX and bearish for the markets. We had a bullish divergence forming on the daily chart. It's playing out so far. There's no confirmation of it ending. So if it keeps going, if the VIX keeps pumping, that's going to be bearish for the markets, or at least the markets being bearish are going to contribute to that happening. I want to make that as clear as possible. Once again, bullish divergence on the VIX, got a nice breakout. No sign of it breaking down just yet. It could just try to keep going. Even if it trades sideways, the market could still fall as a result of that. Amazon barely closed green. It's at 103.65. Sorry. There's a crossover on the PPO. Not seeing too much more. It's going to try to bounce in the morning, retest the 200 EMA around 104. Then it could reject from there and make its way down to 102. But it has some strength as it's holding up okay so far. So I'm hoping Amazon tries to hold up. Might try to hold 101 to 102. So make sure you watch that carefully. Nvidia down 1.45%. It's going to try to bounce in the morning, hit 280, and then it's likely going to reject and just trade sideways depending on what Apple does. And if it comes down, make sure you watch 274, because if that fails, it's going to come all the way down to 270. But that's what I'm seeing so far. For Apple, if it's going to turn bullish, this thing needs to make its way back to like 170. We have some major resistance here between this 170 to about 172 zone. As you can see, it's just been getting rejected over and over again. I could even make this a little smaller. I think I overextended resistance, but the bottom line is it has some heavy resistance right here. It just keeps on getting rejected. So it's going to take a big beat in earnings and a very good earnings for this thing to break out. But if Apple doesn't do well, I mean, the market's going to get rug pulled. I'm not really seeing much of a divergence forming. There's a possible bullish divergence on the much larger time frame. So maybe it tries to bounce a little bit, but it's going to have to try to break the 200 EMA around 167. Don't know if it's going to do that. We are very down in the after hours. We're actually down to about 165 right now. So might try to rebound tomorrow and just trade very flat, waiting for earnings. Then we're going to see a huge move to either the upside or the downside, depending on earnings. In my opinion, from a technical standpoint, Apple looks more bearish because it is very overextended. It's been just pumping and pumping and pumping. And also, it looks to me like Apple's at some major resistance. We have this gap down here around like 163. It might come down to fill it. But that's just technicals. I don't want you guys to be too fixated on Apple tanking after earnings because I don't really know what earnings are going to bring. For Google, it hit 106, which is good. Sorry, AMD first, then Google. For AMD to remain bullish, it needs to get back above 85. So far, there's a very bearish looking trend, but it is trying to bounce right here, right? We have a falling wedge like pattern, and we have this PPO potential crossover. And also a bullish divergence forming, so it might try to bounce a little bit tomorrow, make its way back to about this 84 area. But if it rejects off that and the market gets rug pulled, then we could see AMD drop even lower, all the way down to 75. For Google, if we turn bullish, it needs to break like 50 EMA. We might retest it and then come a little higher to like 107, then fail from there. And we could see Google just make its way down to about 103. It's a real possibility, and I am seeing that as being very likely. Meta came down as I predicted. I told you guys Meta would likely see some downside. Meta is going to likely do the same thing, try to bounce in the morning, make its way back to about 238, then reject off the 200 EMA and come all the way down to 232, if not 230 flat. Last but not least, the 10-year Treasury yield is telling us it's not really doing much. It's actually correlated with the market for now, but it bounced off 33.67, which is a very important support, very close to support at 33.8. If it keeps going, we have this gap up at about 34.39, and then we also have another gap at 35. If it keeps going, that's going to become bearish for the stock market. So watch all of these very carefully. All right, guys, so I thank you all for listening. Please remain calm, cool, and collected. I'm anticipating a small balance and possibly more downside for the markets going into the next couple of trading days. I would be more confident, however, if I knew Apple's earnings. I just don't truly know it. But I am, once again, still favoring downside right now from a technical standpoint. That's what I'm seeing. All right, guys, thank you for listening. Don't forget, excuse me, about my merch shop. If you're interested in buying anything like hoodies and tank tops and stickers, if you're interested, it's really your choice. And I just thank you all for listening. I really appreciate every single one of you. The market to the moon as the long term is still very, very bright. And peace out.